The news headline for real estate is all over the place, lots of noise, lots of negativity. And if you're making your decision based on that noise, the national headlines, you could be making a very expensive mistake. Before you make your purchase, I want you to watch this video. We will discuss exactly what is happening in the Ottawa real estate market and how you can use this information to your advantage. Stay tuned. The Ottawa market is actually in a balanced state. It is not crashing. You got to keep in mind, when you hear what's in the news, they're usually describing two markets, the Vancouver market and the Toronto market. And overall, the Ontario market have not been doing too well, and that is not a secret. However, what we need to also realize is Ottawa market is very different than these two markets, especially the Toronto market. And let's take a look at the numbers. This year, if I was to make a general blanket statement, the stats that were released from the Ottawa Real Estate Board show us that home prices have been up by roughly about 2% overall in all classes of real estate in Ottawa. Now, we've seen some fluctuations from month to month, but overall, year-over-year price for the end of November compared to last year November, home prices are up by about 2.2%. This is not my opinion. This is as per CREA and the Ottawa Real Estate Board. Now, the Ottawa real estate market, what we're seeing is slowly moving into a balanced territory. What is a balanced territory? It is neither favoring the buyer nor the seller. It is somewhere in the middle ground where, sellers have to be very reasonable and realistic with their pricing, and the market will be somewhat competitive. The buyers have to give, realistic offers, make more informed decision, and it gives them more advantage in terms of negotiation. They will have a little bit more leverage with their negotiations, and also the balanced market tend to favor a little bit more on the buyer side. But overall, if we are going to take a look at what is happening in the Ottawa real estate market, it is not crashing. We are not Toronto condo market in the eastern side of Toronto, or the upscale, expensive condo market in Vancouver. We do get bundled up as the same package deal when the news comes in and negative news sells. And keep in mind, during COVID time, these same news outlets were talking about home prices skyrocketing and they will go up forever and so on and so forth. So if we were to really dissect what is happening and look at the data and the stats, home prices have marginally grown in Ottawa. There have been some uncertainty this year. There could be some volatility and uncertainty for 2026, but we shouldn't be selling our home or purchasing a home because we think the market is crashing, or we shouldn't hold off because the market is crashing. The reality is, we are in a balanced territory. Now, what makes Ottawa different from the Toronto market, since we do get bundled up with the same markets like Toronto and Vancouver? What makes us different? This is something that we need to really understand and look deeper into. You see, Ottawa historically have performed on an average about 6% growth on an average for real estate home prices for the last 6 decades. Now, that does not mean that home prices have gone up every single year on record. That's the average. There have been times where home prices have increased in a very short period of time, in a very rapid manner, and COVID was an example. However, COVID was not the only example. We have seen that happening several times in the last few decades. We've also seen periods when usually it follows after those sharp increases in price, a correction or a crash in home prices. And after COVID, we have seen about 20 to 25% correction in home prices. Just to put you in context, that could be worth over $100,000 in prices that have come down in different parts of Canada and even here in Ottawa. And another thing that usually follows the crash or the correction is a period of stagnation followed by a slow and a gradual recovery. And I believe that is where we're at right now. There is some volatility that have crept in this year, which was unforeseen, especially the election that took place, and also the tariff war that went back and forth, and a lot of unexpected announcements came that have really impacted our real estate market and our job sectors. However, Ottawa, one thing to keep in mind is Ottawa, it really is in a unique situation because Ottawa has a 1/3 of its population work for the federal government in some way, shape, or form. So usually governments don't tend to cut massive jobs. However, that could be changing in the next year or so. So regardless of what happens in the Canadian economy, Ottawa has a very good insulation around it with the government jobs, high-paying, high-skilled tech jobs, which have always acted as an insulation for the real estate economy because people have had good, secure paying jobs, which allows them to put food on the table, pay for their mortgage, and that has usually been a factor that has kept real estate prices fairly insulated here in our city. And I do believe moving forward, there might be some volatility with job cuts happening and impacting us directly here in Ottawa. But overall, this year, we saw the Ottawa market was very resilient. We did not have a massive increase in price. We had some stagnation, and in some cases, homes like the condo market, home price actually went down. However, I think in the long term, in the next 3 to 6 months, we should be on our way back to a more slow and gradual recovery. Now, one thing to keep in mind is when we talk about real estate here in Ottawa, also, Ottawa real estate market is not just one market, it is three market. The number one is your single detached homes. We take a look at those homes and, we see how they're doing. Then we take a look at our townhomes, and we also take a look at the condo market. So in general, the single detached homes have done fairly well. They have increased in value this year, but by a very small margin. They have not gone down in prices. They're usually able to capture about 97-98% of their ask. When they're priced well, presented well, they tend to sell within a month. The townhome, which is the most common transaction in our city, has been the backbone of our real estate for several decades now. And this year, home prices for townhomes went up. And they're very popular because it's a great investment vehicle. Lots of first-time home buyers buy it. They're compact. They're not too big. They're not too small. The cost is very affordable. People like them. And this year, home prices actually went up in this segment. Now, where were we lagging? Where did home prices took a little bit of a beating? Was our condo market. What we realized this year is lots of inventory was offloaded onto the market, and just the demand was just not there. So it's a clear case of more supply than there actually is demand, and that usually brings the prices down. So when we talk about the 2% in general home prices going up this year, that's a combination of your single detached freehold home where there's no condo fee, your townhomes, and your condo class of properties which have a condo fee usually attached to it. So when we mix them all together, some section of it did fairly well, some section did okay, and another section of it did not do too well. And because of that, overall, the growth was only 2%. So are we in the same basket as the condo market in Toronto, where builders have stopped building and there's lots of inventory out there, and condo prices have dropped down almost 30-40% in some instances? We're not in that situation. However, does that also create opportunities for buyers who are looking to get something, know that when this inventory is absorbed and builders have stopped building homes, when they stop and all this inventory gets absorbed, what happens to the supply-demand dynamic? Less supply, the demand will be higher, condo prices will also go up. So the condo market essentially is for sale at the moment. And when we're making a decision about purchasing a condo or selling a condo, one needs to take a look at that before making a decision. So if you're planning ahead on making your move, it's very important to really know these facts and figures and not just make a move based on what's on the headlines, right? Headlines usually, they create things that will sell. Negativity tends to sell fast. I'm not saying that everything that they're saying is inaccurate. However, we need to dissect the information and take a look and see how that applies to us. The information that they're giving will not be relevant to somebody living in New Brunswick or in Ottawa. The market is fairly well and have been very resilient in these areas as opposed to the condo market in Toronto or Vancouver per se. So let's not blanket everything together as if the market is bad or good for everybody across Canada. It is a diverse real estate market. Every market performs slightly different. So moving ahead for 2026, what is the prediction? What's going to happen, right? That's the million-dollar question. The reality is, I don't know, right? And I don't think anyone does. There's too many factors in play. Affordability is the number one thing. How the Bank of Canada maneuvers and acts with interest rates, that's going to be another one. I do believe the U.S. election, midterm election, is going to be a significant deciding factor next year. And from what we know, the Trump base, the voter base, have been affected very severely with the tariff war with Canada. Don't forget, we're the biggest trade partners with the United States, and during their midterm election, they will be reflecting back on what they need to do, what kind of messaging they need to do, what kind of policies they need to have to make sure they don't lose their vote banks. And right now, the Trump vote bank is heavily affected by the trade war that has unfolded this year, especially with their aluminum and steel and all that have affected American jobs as well. So I do believe personally that Trump will be tiptoeing, and he will be going back on some of his rhetoric and changing things to appease them, and that might play very well in our favor. So there is going to be uncertainty. There will be some volatility. Are we seeing a resistance in our market where we're holding up fairly well? Absolutely, we are. Does that mean everything is perfect and fantastic, and where home prices are growing rapidly? No, that's not the case. Certain areas, certain segments of the real estate market is not doing too well. If you talk about the condo market in the Toronto area, it is in trouble. There's a lot of inventory. There's just not enough demand. In Ottawa, we see that on a smaller scale, where lots and lots of inventory have been offloaded for condos. And nowadays, all we're seeing in the last couple of years is lots of condos that have been offloaded because builders anticipated that that's going to be the new entry-level homes. Homes will become more unaffordable, so they've geared up more and towards building more of those. However, buyers are choosing to go into townhomes and other options, and not moving as aggressively in the condo market as they had anticipated. So with all the volatility in the market out there, it's really important to really dissect the information, sit down with your advisor, with your mortgage advisor, with your financial planner, with your real estate advisor, just to take a look and see how you're being affected by all this stuff that's happening in the news cycle, right? If you have a condo market, if you have a condo property, how you purchase or sell, it's going to be completely different than your townhome in a neighborhood in Ottawa, right? So we need to know these facts and figures, and not buy and sell simply because we think the home prices are crashing or home prices are going to go up very rapidly. The reality is it's going to be a slow recovery. We are expecting some volatility, and our prediction is next year after the summer, things will start picking up again, and we will start seeing a continuation of a slow and a gradual recovery. The number one thing right now is the affordability, and I do believe the government is implementing policies and changes that could have a very good impact. Just to give you an example, for instance, the HST rebate that has come into play, that has benefited first-time home buyers in a major way, right? They're looking at potentially getting 13% off when they buy their first home from the builder, to be taken off the price. That we're talking about could be worth $60,000, $70,000 off the price that they're going to get, which is unprecedented. So there are measures being taken right now to help with the affordability with the first-time home buyers, and we'll see how 2026 really unfolds. But I do believe that when it comes to at least the Ottawa real estate market, we have proven to be very resilient. Over decades, we've had our ups, we've had our downs, but overall, we have always emerged with a slow and a steady growth of 5 to 6% growth for the last 6 decades. So I hope that this information reaches you and you find it helpful. If you would like to have a discussion about your real estate needs, feel free to give me a call or shoot me a quick message in the comment section. I read all the comments, and I would love to answer them or have a conversation with you and help you explore what is happening around you in your neighborhood for your real estate needs. Again, my name is Murtaza Siddiqui. I'm a broker with Remax Hallmark. Thank you for taking out the time for watching this video, and I will see you next time.